top 5 stocks to watch out for in trade. Well, first up, Reliance Industries yet again in focus as the company's unit Jio Platforms has received a subscription amount of 43,574 crore rupees from Jadu Holdings, which is a wholly owned unit of Facebook, for about 9.99% stake. Remember, it was in April that the company had announced Facebook's 43,000 crore rupee plus investment in Jio Platforms. Just last week as well, you had Intel Capital, the investment arm of the global tech and semiconductor major Intel, which had picked up a 0.3% stake in Jio Platforms for 1,894 crore rupees. And that was the 11th investor to have picked up stake in RIL's digital business, Reliance Jio. So now this latest investment is pegging Jio Platforms' equity value at 4.9 lakh crores at an enterprise value of nearly 5.16 lakh crore rupees. Meantime, Yes Bank in focus as the private sector lender said that the Capital Raising Committee, or the CRC of the Board of Directors, has approved raising funds by the FPO route. This is in fact pursuant to the previous plans that the company had. Remember, the CRC is scheduled to meet on after the 10th of July to consider or approve the price band and the discount, if any. As of now, the pricing is not known. Remember, on the 5th of March, the Reserve Bank had superseded the board of Yes Bank and put it under the moratorium. And this moratorium was lifted on the 18th of March, and the central bank handed over the charge to a new set of board members. So as of now, the company is in a position where they are looking to raise funds, and we will be watching out for the stock in today's trading session. Meantime, you've got Tata Motors as well as Maruti with the production details that are out. Tata Motors Q1 production, the compact segment, well, that is down nearly 75% on a year-on-year basis at 4,792 units. The UV segment has been lower by nearly 84% on a yearly basis to 3,271 units, while for Maruti, their total production is down 55% on year to 49,476 units. No surprises there. Meantime, Titan has come out with its Q1 update for the jewelry, watches as well as eyewear segment. Now for jewelry, they said they have already reopened 83% of their stores and businesses. They are almost seeing all their manufacturing operations, and they have commenced operations. The revenues in May and June were slightly below 20% and around 70% versus what they saw in the corresponding month of the previous year. Recovery, though, has been better than what they originally anticipated on the back of the higher share in the wedding jewelry sales, the good sales from the Golden Harvest scheme, as well as the investment-led demand due to the higher gold coin sales. For watches, the revenues in May and June are 5% and marginally over 20% compared to the corresponding months in the previous year. And for the eyewear segment, the revenues in May and June are at 50% and 35% compared to the previous year. Morgan Stanley has its report out on ACC. They maintain underweight with a target price at 930, saying that the highlights have revolved around the company's specific initiatives in reducing costs. And they also said the company is pursuing a capacity expansion plan and enhancing their portfolio and looking at more stringent emission targets for 2030.